So, episode number, I have no idea, but today we have a very knowledgeable side of things. In real estate, we are incorporating insurance aspect, and we have Sarah right here. So, Sarah, how are you doing, first of all?
I'm doing good. How are you?
Thank you for coming. I'm great. Doing Friday night, so having this podcast. So, been a pretty eventful day, and here we are now talking about insurance and real estate. So, in one sentence, describe yourself for all the people that who don't know you, what you do.
Okay, so in one sentence, let's see.
It can be two. I'm not that good, so it's okay.
Okay. My name is Sara Manzano, and I would describe myself as a pretty chill person. I'm easygoing. I'm positive. I'm really into like learning and growing, self-development, things like that. And what I do is I'm an insurance broker, and I also specialize in investments as well.
What kind of investments are we talking about? Like banking or like portfolio, like different mutual funds? What type of investments are we referring to?
So it's called segregated funds, which is pretty much the same thing as a mutual fund.
Okay, fair enough. Yeah. So I honestly, when it comes to investing, I'm dumb as shit. So you want to kind of give us a little bit of an overview of how does that work? Like what's your audience and what type of like investments they can kind of venture into?
Yeah, so it's actually pretty straightforward. So it's similar. It's the same way as if you were going to the bank.
Right.
So that means if you were to go to the bank, you do a questionnaire. So just depending on your risk tolerance and your goals and your timeline.
Could be small, could be big as well.
Yeah. Fair enough. That will kind of narrow it down to what fund.
Right.
And then you just kind of select the fund according to the profile.
Is like a tenure, like how long the term is, or is it just it's subjective too? Like people can choose what they want to do, or
so it just really depends on what they're saving for.
Okay.
So if it's for retirement, then you're probably saving for over 20 years. But let's say if it's for your first home, then it's probably 5. So those kind of questions are in the questionnaire.
So what's the normal like monthly budget that you should have for, like, for example, if someone's saving for a home? Since I'm a realtor, I want to incorporate So for example, let's say you have a client, they want to save for a house 5-7 years down the road. Like what's their portfolio? What would you recommend for them to do?
Yeah. So again, it really just depends on their income.
Right.
That's really important. And a lot of the times people are not really in that space where they can save a whole lot.
Right.
So that it really just depends.
To break it
down. So I think it comes in handy as well talking to a realtor and just kind of knowing how much the down payments they need to have.
604-355-7001 if you ever need one for next time. So yeah, go on.
And then so just depending on that.
Like for example, if they're looking for an apartment, like this is a down payment they need and how they break it down.
Yeah, exactly. So so essentially, if they are looking to buy a home like within 5 years, you go for a more conservative fund.
Do you guys have a lot of clients which are mostly first-time home buyers or like bigger portfolio people as well? Like how does that work?
So it really just depends. Like, Paul, so he kind of deals with more the larger scale corporate clients. Right. I've mostly been doing family side. I do some like more small business owners.
Fair enough.
So yeah, we do everything all across.
Fair enough. And how long have you been in the industry?
So 3 years.
Both insurance and investment, or is it the same thing?
Yeah, it's the same thing.
Okay,
it's all under the same license.
Do you need one license?
Yeah, it's all under the same.
How different is this from WFG? I'm pretty sure a lot of people have talked about that. Is WFG similar to like normal insurance stuff too, or?
So I would say it's kind of similar, but like I don't know. Well, actually, I really don't know, but I've heard, like, have you heard of the EXP Realty?
I'm actually in Real Broker, so we have a similar idea now because it's like you add people to your downline. So whenever in the past, like a lot of my like friends from high school, they have done WFG. So whenever you get a message, do you want to grab a coffee? Usually that's a cue of like, getting a whole pyramid scheme.
Yeah.
But in like, for example, in EXP and Real like Broker that we're in, it has turned into a little bit of a recruitment. It wasn't like that before. So is it similar? I'm guessing you haven't worked in WFG before, right?
So, no, I haven't. So no, we're different in that aspect.
Right.
We're just more, we're independent. So actually we're under Hub. So
Hub insurance, okay, fair
Hub
enough.
insurance, yeah.
And do you guys do like car insurance and everything as well, or what type of insurance do you guys cover?
No, so just life.
Life
Yeah,
insurance.
so it's completely separate. It's still under Hub,
Right.
but they have two. It's like two separate
Different avenue.
branches.
Okay.
Yeah.
Fair enough. In terms of the market, like for example, realtors, it's a very saturated, very competitive market. How's the market for insurance?
Yeah. So I mean, I would say it's similar.
Fair
So
enough.
there's times where I'm quoting a client and they tell
Right.
me like, oh, I'm actually getting quoted by someone
A
else.
few other people.
So, yeah. So I don't know, like, if I should go into details now, but like, for example, like my experience with that has been like where I present
Right.
a plan to a client, and then I'm like, okay, let me know what they're also presenting, and
Is everything tailored, or do you have like certain plans that they kind of have to take, or can you make tailored plans for them?
so again, it's just really depends on
Mm,
each person's finance and
enough.
their budget.
Right.
But I do have, or we do usually go with similar plans.
Fair enough. Makes
The
sense.
only difference will be on what they afford. So the coverage amount
So
may
you can
fluctuate.
customize that
Yeah.
based off their need.
Yeah, yeah, based on their need, their budget, it
Right.
can be changed.
Right.
But for the most part, we do stick with certain things. So
Got
this
it.
kind of brings me to my experience, my first experience with WFG. So I was really green in the
Right.
insurance, right? Like I didn't really know much.
This is like right when you started, I'm guessing.
Yes.
Fair enough.
So essentially, there's different types of plans, right?
Okay.
There's a term, which
Right.
a lot of people are familiar with, and then there's a permanent plan, right? So in this case, I was presenting a plan. So we usually stick to whole life.
Okay.
So
That's a company, I guess, right? Is Whole Life like a big entity that gives insurance, or?
no, it's just the type.
Okay, I'm stupid when it comes to insurance. I don't have insurance for myself, so yeah. So I can
It's
maybe we
okay.
can talk after. too.
I brought you
There you
something.
go.
I'll
there
show
you
you.
go. Yeah. See, that's a skilled insurance broker. So yeah.
So what happens is like I presented this plan. So it's
Right.
like, let's just for simplicity.
Mhm.
So the plan was for $100,000
Right.
permanent,
Right.
and the premium was going to be $200,
Okay.
right?
That's
And it was
the
going to
monthly payment.
monthly payment.
Okay.
Yeah. So premium just means payment.
Right.
And then they're like, okay, well, I'm going to choose this plan because they're selling me the same thing as you, but for
Right.
like half the price,
Mm.
like $100 a month. So then I was just like, oh yeah, that sounds like a great deal because it's permanent. It's
You're getting the same benefits after
yeah,
all, right?
yeah.
Fair
So
enough.
then it sounds the same. I'm like, okay, you're going to have it paid off completely in 20 years.
Right.
So then I was like, okay, you know what? That does sound like a great plan.
Right.
But then I saw it.
The policy itself.
Yeah. So then I like did the comparison.
Right.
So in that comparison, there's the cost of insurance
Right.
will continue to go up. So the plan that I
the
recommend will stay the same. So that
Right.
means you buy it at your age,
Right.
the cost of insurance will remain the same. So because obviously the cost of insurance goes up the older
Right.
you get.
Fair enough. Yeah.
So then even though like we were technically presenting the same plan, the plan I was showing had a level cost of insurance.
Right.
Which means it was more expensive to begin with,
Right.
but there won't be any surprises in the
In
future.
the long run, yeah. It's
In the
same
long run,
price.
where the other advisor was presenting the same plan essentially,
Right.
but then there's a small word that says it
kinda goes
increases,
up.
yeah,
Oh, fair enough.
YTR, I think. I don't even spell it, so I don't really know what it's called, but which just means it'll increase.
As you get older.
Yeah,
Right.
yearly.
Right.
So then, yeah, I think the average like client, they just don't know these terms. So then when they're presented something,
They just see
they're just like, oh, it's cheaper. Obviously, this is a better plan.
fair enough.
And then what happens in the future is like they get
They just-
surprised that, oh, what it's supposed to be paid off.
Right.
And then they're now expected to continue paying
Fair enough.
premiums.
So everything is very like, again, like you try to give them more, you want to obviously inform them more in the beginning, but a lot of people I guess don't do that, right?
Yeah.
Right.
Well, it's just like if you don't know, you don't know. So
Fair
it just sounds like a
Have
good
you guys
deal.
seen, like, for example, if someone comes to you who has been obviously gotten a very bad deal in the past, have you seen that in your experience? Like they have been screwed over, they were told something else, got something else.
Yeah, well, so with the same plan that I'm speaking of,
Mm.
like someone who's also in the industry, but she works like in the wholesaling side.
Right.
So she told us the same thing. Like her parents bought her a plan.
Right.
It was like paid off in 20 years, right? And then obviously when she became an adult, they were able to assign it over to her. So that means now she's the policy owner.
Right.
And essentially should be paid off. So there should be no premiums that she would have to pay.
Pay after, yeah.
But then in her 30s, to her surprise, she got the letter saying, hey, like there's no more funds in your account of your policy.
Right.
So then now you have to start refunding your policy.
And you can't obviously change that because it's already been done, right?
Yeah, you can't change that because it's already in place.
That does suck.
Yeah. So then those plans, like they're great.
Is it common in the industry though? Like, is it like?
It is very common actually. It is very common. And a lot of people don't even know they have these plans.
So like you just obviously sign here and here, and then you just see the smaller amount in the beginning, and then you just get carried away. Like, yeah, and that's what happens. Fair enough. But you have been so in terms of insurance and investments like that you guys do, how do you guys get like clients? Like, do you guys have like your own like database, or do you do some sort of like like, because for us we do a lot of like marketing, door to door, like door knocking and all that. How do you get more clients for insurance?
So there's two ways, which is like the old school way, which is what Paul likes to do, which is, you go shake hands with people.
Those are, because once you build a relationship with one person, they can probably refer you out to so many people, right? So
yeah, exactly. So he's really good with that.
Socializing, right? So,
Socializing out and about. So that's his strength for sure.
Right.
I'm kind of like the newbie where I'm like, I like to have online meetings and webinars and like, Zoom.
What do you prefer, like Zoom meetings or actually in person? Like, what's more beneficial to close the client?
To close the client, I would say it really just depends. I think both are fine.
Fair enough. I suck at Zoom meetings.
Yeah.
I'm just like,
Zoom.
So for Zoom, like I'm not. He knows I'm not that tech savvy, so when it comes down to like Zoom, I'll probably be late. I don't know how to start it. Like, it's just too many problems. But it's just, when it comes down to like in-person meetings, I'm a little bit of a old school too, because I can talk my way through it.
Yeah.
Because online is a little bit different for me. But I've actually only had one meeting on Zoom. That's about it. Ever.
Really?
Since throughout COVID too, and I'm just like, I'd rather just meet you in the person. I'd rather wear a mask and meet you in person rather than not.
Yeah, I think in person is definitely nice.
Right.
I don't know. I just got used to like always being
fair enough
online.
Do you do a lot of social media as well, or?
Yeah, so I'm definitely a little different in that aspect where I'm doing my best to kind of market online. So
how does that, like, is that easier? Do you find that easier to do, or do you just find it a little bit challenging at the moment?
I think being consistent is the challenge.
Fair enough.
I think like once I'm doing it, then I'm like in the zone.
Right. Then once you get off track, and then it just like takes you a little bit longer, right?
Yeah.
I just make one video a day. Like, I have this one thing. I get to my office, I was like, I have to make some sort of video. It doesn't matter what it has to be. It has to post like before it's like 11 a.m. So once you actually fall off that chart, then it takes you a lot longer to come back.
Yeah.
How do you have any personal policies that you recommend to other people who are like looking into, investing in their future insurance and stuff? I'm just helping you sell right now. That's all.
So I do have, I think I have just about every plan. So I have a permanent plan in place.
That doesn't change.
Yeah.
It stays the same.
It stays the same. Right. It's going to be paid off in 20 years and I don't have to worry about it.
Nice.
It'll protect me regardless of what age I pass.
What was your first investment in insurance? Like, how old were you when you did that?
Okay, so my first was actually a funny story, and it has to do with real estate.
I love funny stories, yeah. There you go.
So, 24-year-old Sarah was very, very green. I didn't know anything about real estate, anything about mortgage. My parents never really taught me much about finance or anything. So
you're just learning by yourself.
It was just me and my computer, laptop,
Google,
figuring out how to buy a condo.
Right.
So, found my realtor online.
Right. Where was your first condo?
It's actually in Wally.
Wally, nice.
Yeah. Good
return after all. Like, obviously, if you bought it like a while ago, you would have had a good return out of it, right? So
yeah. So I got my apartment, and then I was like, okay, like talked to my realtor. He's like, hey, well, you need a pre-approval anyways. So I was like, hey. So I remember, I think it was the day I was getting my keys. He gave me my keys, and he's like, oh, by the way, like, do you have like home insurance? You should probably get home
Because you're
insurance.
supposed to have that before.
Yeah. So
you're
then,
supposed to have that on completion.
yeah. So then I was like, I think it was like around that time completion. So he's like, you need to get home insurance. So
Right.
then, again, I like didn't know like where to go get home
What were you
insurance.
doing then? Like before insurance, which industry were you in?
So I did design for a bit. I did
Nice.
kitchen design,
Nice.
and then I did marketing.
Wow.
Yeah, so fun times. So yeah, so then I like my mortgage broker had like messaged me, and I was like, "Hey, I need insurance," and she's like, "Okay, I'll send you someone." So then like again, I didn't really ask much questions. I was very shy back then, so I just
Right.
I was
Whatever
like,
you
"Okay,
say,
sure."
I'll do it.
So then I just remember getting a call from
Right.
like someone, and then I was just like, okay, like answering all the questions, all this medical questions. I was just like, yes, no, whatever.
Right.
And then she's like, okay, great, you're approved. And I was like, okay, awesome. I in my head, I
Is
was
there
like,
a
I got
credit
home
check
insurance.
too for home insurance as well? Like, is there certain like things you have to get approved for, or is it just like
No.
fair enough?
Yeah.
Was it different before, or is it different now, or is it the same thing?
No, for home insurance.
Right.
No.
It's the same thing, right?
You just need
add the
it's just like
information.
for liabilities, like if like
Fair enough.
the
How?
building floods or something like
Right.
that kind of insurance.
Fair enough.
Yeah. So so she called me. I answered all the questions, and then I got like my email saying I got approved for disability insurance. And I was like, what? This is not what I wanted.
Oh wow!
Because she just called me and just started went straight into
Fair
the
enough.
questions.
Did you
So
not
I didn't
ask her?
ask. No, I didn't ask her.
Fair
I was
enough.
just like, oh, insurance.
One thing
yes.
I've learned in like life and business, you should always ask more questions.
Yes.
More questions you ask, better your life will be after all.
Yes, ask a lot of questions. So
Right.
again, I was not that person.
You live and learn.
Yeah.
So,
So then, yeah, that was my first time getting any type of insurance. It was my disability insurance.
wow. Is that like a long-term policy, or were you able to cancel it after a certain while?
No, I still have it.
Okay, nice.
I still have it.
I guess it's just it's good.
It's
good
like
you have it at least.
$24 a month. I'm like, if something does happen, I'm self-employed.
Fair enough.
So it's like,
So after it kind of worked out after all. So fair
yeah.
enough. So did she give you like your home insurance and your disability at the same time, or
No. Then I had to actually go to the general side of
Oh,
insurance.
so she didn't even give you the home
No,
insurance. Oh,
and then
wow.
I had to get it after.
Live and learn it is.
So that was my first policy that I owned.
Right.
And then after that is when I got into the industry and I started learning more. And then
enough.
that's when I got my whole life, my term, and my critical illness.
Is it more tedious than it is like before you got into insurance? Did you always think like, oh, there's just too many moving parts, I don't know if I should get insurance? Once you're in the industry, is it easier to just kind of get a policy, or how?
No, I honestly no one in my family ever talked about insurance
Right.
or anything. So
Right.
I just I didn't even know what it was
Fair enough.
until I met Paul, and he's like, "This is what
Fair enough.
insurance
Fair
is." So I was like, "Oh, okay,
Okay, that makes sense.
yeah."
How'd you meet Paul?
Actually, through my cousin.
Okay, nice.
Yeah.
I remember him. I used to be at the same office on 66th and 152nd Street.
Okay.
So I used to see his fancy cars. So that's how I kind of knew him. And the guy we were leasing the office from knew him very well. So that's how I knew Paul. And I've seen him at a lot of events as well. So yeah.
Okay.
Because now with real estate, there's a lot of pre-sale events, right? And a lot of developers do invite a lot of people, right? So a lot of, which is different now than before. Like if you look at before COVID, no one really did big events in terms of development and all that stuff. But now it's very out there. So everyone kind of meets everyone all the time.
Yeah,
Yeah.
for sure.
Do you like going to network events, or how does that play in your role? Like, do you guys get a lot of business from that, or?
Yeah. We do a lot of sponsorships for
Fair enough.
charity events.
Right.
So there's one next week. Actually, it's not a charity event. It's just a magazine, Desadi, something like
Saudi. Nice. It's what are you guys are sponsoring them, I'm
that.
guessing?
Yes.
Fair enough.
Yeah. And then I do some networking events too on
Nice.
my own.
Nice. I used to go to networking events, and I'm just too tired by the end of the day. I'm just like, I
Yeah.
can't drive anymore, man. I just
You
if something is close by, I'll come. But other than that, I used to go to every single in any social event that you're having, I'll be there. But I'm just like, I can't anymore.
I know.
Yeah, getting white hairs now, and I can't. Just getting old now. I just need to.
What?
Yeah. But how do you are you also a realtor too, or?
No, I'm not a realtor.
Right.
But I do love real estate. So that's always something that I'm
Would you
actively
explore
looking
that
for.
avenue as well down the road, or are you happy where you are right now with insurance?
So I'm definitely exploring. I'm learning more about investing in particular.
Nice.
So I was able to my first home. I is my first
disability insurance one.
yes,
Yeah.
is my first, I guess, my first property.
Right. You still have that?
I still have that.
Nice.
Yes. And things got really tough. Like,
Right.
honestly, I was on a variable mortgage rate. And again,
It's
Sarah
been, yeah.
being green.
Oh, so you got a variable rate, I'm guessing, in the beginning?
Yeah.
And at a low rate, very low rate?
Yes.
How, 1%,
It
1.5%?
was, yeah.
And then it went to 6%?
Yeah.
Yeah, a lot of people went through that.
And then I had 2 mortgages on
wow.
variable. So I had the home that I'm living in now as well on variable. And again, I was so green. So like, you know, I didn't like.
You didn't ask questions?
I didn't ask questions. And
do you ask a lot of questions now?
yeah,
Okay,
now I'm like,
perfect. See, you're learning.
now
Yeah,
it's
there you
like,
go.
oh shit. Like,
If something happens, like I got a list of questions I need to answer first, then we'll go from there.
yeah, so that was an experience having 2 mortgages on variable.
Because
Like,
it changes your whole financials, because you go from like paying like 1% mortgage on a, just for example, $1 million house was $3,500.
yeah,
And those people are paying about 6 to 7 grand almost, right?
Yeah.
So that makes a huge difference.
yeah, it was really big.
Yeah, I had the same thing too. I actually went for variable knowing the consequences, so maybe I was green and red at the same time, but no one saw this coming too, right? No one saw the jump that was big increment too.
Like, the thing is, like, I do remember the mortgage broker, like, explaining it to me, but I just remember her saying, like, overall, it's, like, the best one, you know, like, and it's true, like, you know, with time.
Right.
But then I think it's, like, when you just don't realize the impact it'll have
on
you when you're
it's
in
tough.
that situation.
It's tough.
So I was, like, about to, like, I was, like, even thinking, like, okay, I might have to sell my condo because things are getting
Are you
crazy.
a tenant, I'm guessing, in one condo?
Yeah.
How's the experience with tenants?
So my first tenant was amazing. She stayed there for 4 years.
Nice.
Student, and then she went back home to Germany.
Nice.
And then after that, it's been
Rock and roll.
interesting.
It's just bumpy road, right? Yeah.
No, it's like, okay.
Is there like a lot of tenant insurance you guys do for clients as well, or do tenants get their own insurance usually, or do the owners get the insurance for tenants?
So that's that's general insurance. So we don't do that. But what I do is I have my own insurance for my property. It's very, very cost effective because I'm not living in there. So it's like it only protects like the cabinets and things like that.
Right.
And then the tenant should also have their own just to protect their own personal belongings. So you should have 2. But
I had one insurance that was just a start insurance and my own, like the small, like the lowest to the lowest insurance. And one of my tenants decided it was a gas stove and my apartment was about to go on fire, but it didn't, luckily. But the whole area in the kitchen was kind of like all messed up. And I asked her, I'm like, where's the insurance? She's like, I don't have it. And I'm like, fuck. And my deductible was like, I think $1,500 at that time. And I'm just like, I can just get the cabinets changed for cheaper, but everyone should get tenant insurance for sure. I learned the hard way too.
Yeah.
I was very green too.
Yeah.
Less questions.
But then also there is a deductible. So what happened to my tub, which people should take note of and have plumbers check their stuff regularly.
Right.
It's like the shower faucet. I don't know what you call like the silicone thing that kind of keeps the water from seeping through. So I guess like the faucet was not working properly, so the water started going through the wall, seeping in, and then it caused a flood.
In the strata?
In the strata. So it went to the below unit, but then the damages weren't big enough where the strata would cover it.
Fair enough.
So then like I still had to cover it, and then I called my insurance company, and they're like, oh no, we actually don't cover that. So then
I had a similar experience. My tenant just recently, our washer dryer kind of like started leaking. So the water went throughout the building. So I was on the 4th floor and all the floors were affected. But my insurance guy told me that you should only care about your unit, and the rest of the people actually had to do their own insurance. Like my neighbor downstairs tried to sue me that you pay for my stuff.
Yeah.
But legally you're supposed to have your own insurance. So I only had to pay for my damage that it caused in that unit. So technically the people were affected. They were supposed to use their own insurance.
So what happened with mine is the people downstairs called the after hours emergency.
Was it a lot of water or was
No.
just...
Well, not that I know of. It just went to the one unit below.
Right.
But because it was after hours, they did a direct bill to my unit. So then I was responsible for the unit below. So I don't know the logistics.
Technically you weren't supposed to pay for it. I had the same thing, exact same scenario. Because I got called by like all the 3 tenants.
Yeah.
And I'm like, I'm not paying for anyone. My broker told me, he's like, just give me their number and I'll talk to them. I'm like, all right, sounds good. And I have a Vasanasa insurance. I don't know how to pronounce the company.
Okay, well, I need to
Vabanasa or
talk to
something?
your broker. You see, this is why you need to like
Ask
know people
questions,
and ask questions, because like they were like, no, you're 100% liable. But then it's also like depends on the broker and the policy you have. So that's like not.
Fair
Maybe
enough.
that affects it too. I don't know.
pay pretty. I had a tenant in there at that time. I don't pay as much as I did when I had the property for myself.
Yeah.
So I was paying like $100 a month.
Yeah.
So, and he's like, just give me the number and I'll talk to all the tenants. And he did. I'm like, all right, sounds good. Works for me, man. Less headache for me, more for you. I'm okay with it. Yeah. So I'll give you his number after. Maybe you can talk to him. Yeah. But,
ask some questions.
No, but in terms of insurance, it does protect you quite a bit. But the deductibles are usually high, right? Or is it just depends on your policy, I'm guessing?
I think it depends on your policy, yeah, when it comes to that.
Because my deductible was, I think, upwards of $1,200.
Yeah.
But then he also got that waived somehow. So I didn't even pay a deductible.
What? Okay, I need his number.
And I told him, like, is everything okay? Like, yeah, you're good. You don't have to pay for it. I'm like, all right, cool, sounds good.
What?
I just ask a lot of questions, and I tell them if you need anything and I can help you out, feel free to reach out to me. So you just throw something at them, and they'll help you out.
Okay, nice.
So in terms of stories, I'm guessing you work in insurance. You probably have a lot of bad and good stories too about clients. What's the worst experience you've had so far?
Honestly, I haven't really had the worst experience. I think like the worst experience for an advisor's life is probably delivering like their,
fair enough.
The life insurance policy. I'm assuming that's tough. So luckily, I haven't had that experience yet.
Fair enough.
I'm sure that
must be heavy.
Tough.
Yeah, that's heavy. Yeah, for sure. Yeah, no, that's something that's. I guess you do get used to it, but it's a very heavy moment, I guess, right?
Yeah.
Right. And in terms of any challenges being a girl in the industry, do you run into issues that you don't want to, or?
Being a girl in the industry, I think it's like the same in every industry, because I've talked to a lot of realtor girls as well, and I think we all kind of have the same
idea, right?
Situations happen to us, so I think it's like any girl that's kind of out there and doing business for herself. I think it's just kind of draws attention, good and bad, and sometimes there's people that
There's always like obviously good and bad in every business, but I guess from that aspect, it's just sometimes it could get to you, I guess.
You do have to kind of like ask twice, like what people's intentions are when they want to meet. That's why I like doing the Zoom. Make
more sense then.
Yeah, that's why I'm okay, you want to meet, let's meet in Zoom first.
Right, fair enough.
And then maybe after, then we can meet in person.
You can at least understand what they're actually, fair enough.
Yes, because I have had people like make meetings and they're like, oh, I just wanted to see you. And I was like, oh my gosh.
Like I'm trying to, sell you some insurance. That's about it. And in terms of your work and, your own time, is it easy to balance with insurance? Because I guess when you're in sales, your phone's always ringing, right? So that's one thing that's kind of sacrificed, I guess, towards the business. But how does that work for you? Like work-life balance?
Work-life balance for me, I find it to be okay. Like I personally just do my best to schedule things after a certain time. So then I have like the mornings for myself.
Don't get a call after 5 or 6, I'm guessing, right? Like
So that's like the one thing that is a little bit not the most convenient, I would say, just because people do work 9 to 5. So then you want to be flexible. So you want to like be like, okay, we can meet at 7 after work, right? So that's like the only thing.
Right.
But then I personally enjoy like my mornings to myself. So
I'm like opposite. I'm just like after 6 p.m. I just like, I'm not going. No showings after 6. I'm just like, I'm a morning person, so I wake up pretty early. Yeah. But then I have to go do showings at like 6:37 because you can't say no to clients. Yeah. Either. And it's just like the whole energy is just drained, and I'm just like, fuck, I just need.
But you don't do open houses that late, no? I've never seen.
In terms of private showings, yeah. Oh, okay. No, open houses are usually 2 to 4, and we do have a team of 7 agents now, so we try to like distribute all the open houses. And I go if I have to go, but if it's a new listing, I'll probably go the first week. But every team, like even our like all the members and stuff, they kind of want to do more open houses because you get a lot of business through that. Yeah. So it's a good exposure for them as well. But after 6 p.m. showings, they're pretty brutal, especially when they come late and they tell you like we're just running 20 minutes late because of traffic, and I'm just like fuck. I always get everywhere before time. Oh, that's good. And sometimes I'm just sitting there for like 15, 20 minutes, and I'm just like, this is great. Yeah. But it's part of the business, right? So, and in terms of becoming a realtor, we were talking about, would you would you actually do the avenue in terms of sales and stuff, or are you just doing just marketing at the time for that? Because I see you post like some
some
pre-sale
real
projects
estate.
and everything.
Yeah, well, I think it's just I do have to be a little bit more specific with my posts, but like I do think real estate and insurance do go hand in hand. You know,
Right.
mortgage protection, and I'm also able to open up the first home savers account, which is a really great plan for her
How
time.
does that work?
So it's actually a really great plan. I wish it was around longer when I was saving up for my home, but
Right.
so it has the same benefits as the tax-free savings account and as an RSP.
Is there a certain amount of money you can take out of that account, it being tax free, or is it you can pull out anything as a first time home buyer?
So it is regulated. It is a registered account. So
Right.
that means annually you're only able to contribute up to $8,000, and it maxes out at 40,000.
Okay, fair enough.
Yeah.
Fair enough.
But the growth within it is tax free, and then it's similar to
What's the return on it, like at a usual rate?
again, like if someone's looking to buy a home sooner, you want to go with a more conservative plan. So probably 8. But if it's going to be,
Is it 8%?
yeah.
Oh wow!
5 to 8, yeah.
I used to work at a bank before, and they always try to teach me all that stuff. I'm just like, it's going on top of my head, so I just never cared.
Yeah.
But I thought
Like
it
there's
must be
some
lower.
funds that go up to like 36% on returns,
Oh wow!
but those are more volatile. So again, it just depends on like how long they're gonna
Like 2
they're
years.
gonna put it away for, and then
Right.
again, like once they're ready, once they're like closer, like maybe 2 years, then you can switch it over to a more conservative fund.
So in terms of like the money, for example, I have this account.
Mm-hmm.
I can only take out 40,000 out of it if it's tax free.
So the first home savers account, you're only allowed to put in
8,000.
40,000 the whole time. So
Okay, fair enough.
whatever growth is there, you can
Right.
take out.
That's all tax free.
Yeah.
Fair enough. Okay. And in terms of like, for example, but there's no other tax free benefits if you're not a first time home buyer, right? Only first time home buyers get the tax benefit.
So this account, you have to be a first time home buyer,
Right.
but
In BC or in Canada?
it's federal, so it's all provinces.
Oh, okay, fair enough.
But they also consider you a first time home buyer if it's been 4 years that you haven't lived in a
So
in
if I
a
sold the
primary
house-
residency. So
fair
like
enough.
essentially, like I'm hoping to open up one eventually as well.
So you haven't bought anything for 4 years, then you're
Mhm.
eligible for that plan.
Yeah, but
That's good to know.
your primary residency can't be in your home. So that means you would have to like move, like maybe rent a spot.
You can show something too, I guess.
What do you mean?
Like you can show that you're renting something even if you're not. It doesn't work like that.
No.
Okay, fair enough. I'm just thinking outside the box.
Yeah.
But so you can, if you don't live in your primary resident, let's say you have both rented
Mm-hmm.
and you're renting a place, and then you're eligible for something else after 4 years.
Yeah.
Fair enough. Makes
Then
sense.
you can open the account.
Oh wow, makes sense. I had no idea, so that's good to know.
Yep.
In terms of you, do you guys work at the Ocean Realty? Do you guys have an office inside the building, or
Yeah. So we're just renting one of their.
does that
their
help with
spots.
business?
Yeah, that's good.
You get
Like
a lot of
there's quite a bit of realtors that are there, so
Right.
it's good.
fair enough. It's owned by Renee, right? Renee and Sunny Broad. They recently took over, right?
Yes, I don't know too much, but I know Renee, and then he has a couple partners
Fair enough.
with him.
Yeah, no, they have a lot of good agents too. I know Nick Lal from there,
Yeah.
Cam Tour or Carm Tour, and their Baines.
Yes.
Yeah, so you guys are probably with the same people almost every day. In terms of, so we'll wrap up the podcast really soon. Any questions from you to me regarding real estate or
Yes.
anything else?
Yes.
You can start
I
the
have a lot of
interrogation now.
questions.
There you go.
How much time do we got?
You have 20 minutes. Longer too, doesn't matter.
Okay, so I have a question. So, okay, let's say there's a farmer. There's a
Mm.
story, right?
Mm.
The farmer has a goose, right?
Okay.
And his goose lays golden eggs.
Right.
So, what do you think is more important to insure, the golden eggs, or would you insure the goose?
That's a good question. I would. Is it the first time that she ever had a golden egg or whatever?
No, she just lays golden eggs. I
She
guess.
just lays golden
Yeah,
eggs.
just-
Okay. Okay. I'll insure the goose. Are you supposed to insure the goose or are you supposed to insure the egg? Because if she's doing that often, then you can still get the same benefit out of it.
Yes.
So I was right?
Yes, you're right.
There you go.
So that's a good analogy when it comes to insurance, right? A
Right.
lot of the times people.
I see what you did there. You asked me a question to sell me something, so it's great. I like that.
Yeah. So that's a good analogy for insurance, right? So we protect our homes,
Right.
we protect our cars, so we protect our things, our assets. But really, the one that's producing these things,
Yourself.
it's us. So
Oh, wow.
we're the biggest assets. So that's why it's important to make sure that there's plans in place. So like,
will
let's
help
say
you.
if you were to fall sick,
Right.
that your plan will pay you out so that you can continue.
Living the way you do.
Yeah.
Wow. That was a good question. I see the whole connection of insurance and real estate here. So nice. Do you have to insure the farm too, or just?
I would insure in the farm too.
Yeah, there you go.
I would
you
insure
get
everything.
two clients out of one. Fair enough. Any other questions regarding goose and egg and insurance?
No.
Nice. So in terms of where do you see yourself in like 5 years? Do you want to be in the same industry? Do you want to change something in terms of your marketing? Like, what's the plan?
Yeah, so my plan is definitely to be more real estate focused.
Okay.
So again, like my
Do you enjoy that more?
Yeah, so
Right.
I like I said, they do go hand in hand.
Right.
So like as of right now, I am working with, I wouldn't say a team, but we're kind of like partnering up with people doing joint ventures. So I'm
Nice.
hoping to acquire my first multifamily.
Nice.
So that's in the
Is
works.
like a pool of investors?
Yeah.
Nice.
So, well, yeah, it just depends on how big the deal, right?
Where are you guys looking for the multifamily? Is it local? Is
Yes.
it Kamloops? There's a lot of multifamily
Different
there.
province.
Ontario?
Nope.
Calgary?
No.
There's only three provinces I know for real estate. What's the where are you guys
I know
looking?
this one people are not
Montreal is actually good too.
not a big fan. Yeah, honestly, I think that anywhere can be good or
Right.
can be bad.
It just depends on, like, you got to look at all the moving parts, right?
Yeah.
But
So right now we're looking at Saskatoon just because it's a little bit more affordable and you can
Right.
get more units.
how's the pricing look like there? Like, for example, if you look at, I'm doing a multifamily deal right now in Kamloops. It's a building, 13 units for 3.2. Nanaimo is very similar. You get up to 15, 16 units around the same price range. How's the pricing?
Yeah, so this is 22 units and it's about 2 million.
So it's like 40% discounted. And how's the rental in terms of demand and all that down there?
So from what I hear, demand like is everywhere. It's all throughout Canada.
Fair enough.
So the quality of tenants vary quite a bit. So I think like you have to be
Sure.
more cautious when you go to other provinces.
You got to meet the property managers and all that too.
Yeah.
Right.
But I think there's a housing shortage just
In
about
Saskatoon?
everywhere.
Yeah.
Everywhere in Canada. Yeah.
Not in Calgary. Calgary is like pretty vast. Like, they're doing a lot of developments and stuff.
Oh, okay.
If you look at Vancouver and Toronto, like, there's just like only that much land, right? So, but that's actually not a bad price in terms of 22 units for that price range. And what's the return? Like, do they appreciate faster?
No.
The less appreciation there.
Yeah,
Right?
definitely.
Good cash flow out there.
Yeah. But yeah, it just really depends on like the strategy, right? So like doing the refinance.
Have
being
you guys
able
looked at
to
CMHC insurance stuff?
Yeah.
Because they lend you almost like 90%.
95%.
95%. Wow.
95%, yeah, if you hit their criteria, which honestly isn't that hard to hit.
Is it like easy to kind of like, or because from what I heard from a previous client, because he got declined from them, but
Oh, he did.
his numbers are all over the place, obviously. But he told me like it's like the list of things that they need is very like absurd. But I just never looked into it. But
So from what I know, it kind of works like a point system.
Okay,
So you
fair
want to
enough.
hit your points.
okay,
So I think that I think they say 10% of the apartment or the building has to be affordable housing. So
okay, fair enough.
As
So
long
you're
as there's-
helping the government
yeah,
at the same
so
time,
one will be affordable housing,
right?
and then it has to be efficient. So like
Right.
just changing light bulbs, doing like things like that. And another one is you want it to be like accessible, so handicap accessible. So you just want to make sure you add like railing and
So the building has
stuff.
to fall under that code.
Yeah.
fair
So then
enough.
there's like it's like a point system. So you just want to make sure you hit all the points, and then that'll qualify you
And
for
is that
the
a
5% down.
30-year amortization or 25, or is it longer?
30 or 35.
It's
longer.
35 as well. Okay, fair enough.
Yeah, I'm pretty sure.
They do a lot
Check.
of building loans as well if you're building a building like that, right? Fair enough.
Yeah.
That's actually interesting. And how's the rental there? Like an average 1-bedroom?
So it's just a little over 1,000.
Okay, fair enough.
Yeah.
So if you compare that to like Kamloops or something, Kamloops like probably like $1,500.
Yeah.
Fair enough. But there is, again, if there's demand out there, then that's all you need, right? So
Yeah, exactly.
that's nice. And then in terms of the insurance on multifamily, how does that work? Is it do you have to get different insurances for different units, or is just one strata insurance?
Yeah, it would just be one.
Right.
It'd be one strata, and then any tenant, I think anywhere, like they have the option to get their own insurance, which
Fair
is
enough.
ideal.
Now, as an owner, do you also take insurance of each unit too? You know how, for example, like you own a condo now, you have insurance for the building that you pay in strata,
Yeah.
and then you have your own insurance. How does that work?
So I'm not too sure because I'm not there yet.
Right.
But from my understanding, since you own the entire building, because
Right.
like in the strata lots, there's individual owners per lot.
Right.
But if you own the full
Just one owner.
building,
Fair
so it's
enough.
just one, and then
Right.
the tenants would have the option.
That makes sense. Nice.
Yeah.
That's actually very exciting. Yeah. Have you guys been looking for a long time, or?
So I just started. Like I always
Nice.
knew I wanted to, but then
Right.
I just started back in March or May, I think.
That's awesome.
Learning about investing, and
Right.
I learned a lot about like joint ventures and like creative financing, which I
Right.
wasn't aware of. So shout out to Wealth Genius. So that's the program that I'm doing. I don't know if you're familiar with them.
I've heard of them, but I've
Yeah.
never looked into it much. I have a preferred broker that I go through, but I haven't looked into multifamily. I want to get into the development side of things, but it's just a little bit harder to get in because the land cost is so expensive now. So multifamily is actually a good way to go because everything is already built, right?
Yeah.
You can renovate it.
Yeah. I mean, you can, if you find the right building, you get your cash flowing until you're able to build. So
You can just refinance that and kind of go from
and you
there.
can, yeah.
How does it work with insurances? Like, how does mortgage insurance work?
So in general, like mortgage insurance, like on the life side,
Mm-hmm.
you just want to make sure that there's enough insurance to cover.
Right. The value of the building, or what do you mean by that? I'm again stupid 5-year-old, no idea how does that work. So
Okay, so like mortgage protection, it comes to play in two parts.
right.
So like for the average person, right? Like let's say there's a family, and you know you kind of have to ask that question, right? If your partner isn't here, if they die prematurely, are
Right.
you going to be able to afford your mortgage without them, right? Are you able to sustain this lifestyle if your partner isn't here? So that's why mortgage protection. So essentially, what it covers is the debt. So that means upon your passing, your debt will be taken care of, so your family won't have to worry about it.
Fair enough. Makes sense.
But in the investment world, you do joint ventures.
Mm-hmm.
So in joint ventures, or actually in any business partnership that you're in, you kind of want to make sure that you're protecting yourselves and the partners.
Right.
So that means if you're like an active partner, that means you're doing the work.
Mm-hmm.
If something were to happen to you,
Right.
will the business be able to produce the same amount without you? So then sometimes as a business partner, you might need to get insurance for each other.
Fair enough.
And same with like real estate investing, joint ventures, right? There's some active partners and non-active partners. So if the active partner's working on a deal and they pass away,
Want to make sure that they're
and you have done capital raising and these people are expecting their money back, right? It can come and play in that aspect too.
I had no idea I can get insurance for that too. So this is a very knowledgeable podcast. I'm learning a lot too. In terms of your current role, do you want to change anything, or you want to add something to what you're doing right now that'll help you in the future?
My current role, not really. I'm still kind of figuring it out because, like I said, like I am really interested in real estate.
Right.
I'm always.
Have you done an exam yet?
No, I have.
Right.
Like I've done like the workbooks and all of that, but like being an agent in particular, I'm not sure, but like I do want to focus more on like real estate investing.
Fair enough.
And then also just encouraging people to like save for their first homes. So that's one thing I'm for sure going to start doing is doing more first home savers account webinars.
That would be a big audience for you too, because there's so many people out there, right? So
yeah. And then also like I do eventually want to help people get into their first investment properties.
604-355-701. Especially if you're not being an agent, that's perfect. But no, that does make sense because that does give you a lot of, it's a good audience to target, right? And there's a lot of people now buying homes and all that. In terms of first-time home buyers, can they also save this money for pre-sales, or it has to be existing project?
No. So it could actually even be for a new construction. So
It could be
if you're
for
a
that.
first time home buyer and you want to build your first home,
Right.
then it's
But they can only save up to 40 grand though, right?
yeah.
Right. So if you're looking into buying a unit in a pre-construction, that would be something they can do.
Yeah. I
Sure.
mean, you don't only have to use your down payment with that. Like, that's going to be a portion, but people can also go into their registered accounts, like their RSP or their
Right.
tax-free savings account or just cash. A lot of times people, like parents, and give their children the down payment.
Right.
So, yeah, it doesn't matter how you come up with the down payment, really. But
Fair enough.
for the registered account, there's
Has to be certain.
limitations because the government likes to regulate everything.
Government likes a lot of, yeah, fair enough. But yeah, I'm very happy that we did the podcast. I actually learned a lot about insurance. I always knew like I want to learn more about it because I want to get into it too. So I
Okay.
could be a client as well. So yeah.
I do want to share one more thing.
Yes.
That's very important.
Yes.
So for people, especially that are growing their real estate portfolios, or just have really nice homes, because everything's over $1 million over here. So
Probably more. Now,
Yeah.
Given the fact that we are in like any nice house right now in Surrey is going for like 1.7, 1.8,
yeah,
which is pretty crazy.
condos are going to be at like 1 million in a few years for sure.
We have a very if the way market is going right now, yeah, for sure, yeah.
Yeah. So one thing that people aren't really aware of is
Mm-hmm.
even if you're passing your home or your portfolio or whatever it may be to your children,
Right.
there is taxes that are going to be due.
Correct.
So
How do you work around it?
you can't really work around it because it's the government. They want their money.
Can't you,
But
like, if it's family to family, isn't there something through
No.
lawyers you can do or accountants you can do?
No. So when it's between a couple, like a husband,
Spouse,
wife,
right.
spouse,
Mm.
then it's a rollover.
Okay.
However, when it's to your children or anyone else, business partners, whatever it may be, as soon as you pass away, it's like you put everything up for sale. And whoever is your
Right.
beneficiaries, even
They
though
have
they're
to.
your beneficiaries, they have
Right.
to buy it off you. So that means they have to pay taxes.
Fair enough.
So if you're someone who is in real estate, especially, or you have like mutual funds or any type of assets,
Right.
you want to always make sure you check in with your accountant and just ask what your tax bill will be. Because a lot of the times, like we've had that
Just
before.
ask questions, basically.
Yeah, ask questions. Because we've seen that where someone comes in their 80s.
And they're shocked, right? Yeah.
And they own, a business, they have properties here, properties there, and then their children don't have enough capital to actually cover the cost of the
Right.
taxes. So that means
Fair enough.
when dad dies, you guys are going to have to start selling the business, selling the home. So a lot of the
Right.
times people aren't aware of how big the tax bill will be.
Fair enough.
So just make sure that you are talking to your accountant, you're asking the questions of how much your tax bill will be,
Right.
and then you want to make sure you have enough either life insurance or cash available
up.
to cover.
Well, that's actually good to know because I thought it's just if it's your kids, you can just do
Yeah.
something and they'll take the properties. But that does make sense.
Yeah.
But,
It does, like, I think there is a limit, like if it's like under $1 million or something, then it's like less tax implications.
so it's just different windows and stuff, right?
Yes, but then for the most part, if it's like over $1 million, which again, because of the area we live in, most
Right.
things are going to be.
So moral of the story is ask questions always.
Yes, talk to your
Yeah.
accountant, ask questions.
Right. Okay, perfect. And if you guys need more information, what's your phone number? You can tell them, or your Instagram, whatever you would like to share.
So my phone number is 604-760-8565, and Instagram is saramanzano.life.
If you need real estate, 604-355-7001. And perfect. Thank you so much.